looking screen. Hopefully things recover from here.
It's also like that bad hangover after a very big party that you have, right?
Yeah.
So this new
Full house
Christmas
party,
and New Year's-
hangover. You guys are still in New Year
Or
mode,
maybe we experienced some of that earlier. Let's get to the market action, Prashant.
Absolutely. You know, so the laggards have come back, right, this year, at least in the first week. And the laggards, I mean, markets like China, markets in Europe, those are the ones which are which have come back pretty strongly. I looked at numbers from the lows of October. You can look at the returns from the 1st of November over the last 2 months, 2 months and a few days, and it's pretty stark. China, for example, I mean, you look at the Hang Seng market, it's up 43% from the lows in October. The Euro Stoxx 50, which is made up of the 50 largest, most widely traded stocks in Europe, that is up 22%. Nifty is up 5%. Usually, if you were in some phase in 2022, it would be exactly the reverse. Nifty would be up some, whatever, 20, 25%, and other markets would be down. So the outperformance was on the side of the Nifty, which is reversed a little bit, which many actually were alluding to, that perhaps that is something which may happen, and I think it's playing out. How much more, of course, is the question. I want to get some levels out of the way, at least on the Nifty. So on Friday, we got that near 1%. I mean, actually, we fell 1% and then pulled back a little bit. We ended about 0.75% lower. The 26th of December low is 17,774. We came within 20 points of that, and we saw a nice, clean 100-point bounce. So, that becomes the first kind of marker. If that goes, then you're talking about some slightly larger, bigger handle numbers. The next one is, to my mind, about 17,500, roughly 17,472 to be precise. It is the 38% retracement of the entire rally from the lows of June, which was 15,183 to the all-time high. That is around 17,500, just rounding off that number there. Will we actually do that? I think a lot of it will depend on what is next, right? Which is earnings season. You get the IT services companies, which will kick it off on the 9th, which is Monday. TCS will report after market hours, and then one after the other, we really get into the thick of it. I think from a IT services perspective itself, it's very interesting because it's one large grouping which is down quite massively. And if, markets get some amount of confidence that things are not so bad and maybe FY24 eventually things will get okay, it could be an interesting space. Although on Friday, that is today, stocks did sell off. I mean, the index was the top loser going into the earnings season, so the market doesn't believe it will be a good one. US, from a global perspective, it's about labor market data. So the US jobs data today is important. All the high-frequency numbers that we've gotten so far, they all indicate that the labor market is far too hot and far too strong for the Fed's comfort. All falls in 2022, last year, have been accompanied by a rise in the terminal rate pricing of the market. Basically, market pricing of what the Fed peak rate will be. Every time it moved up, market fell. It's been stagnant. That rate has been stagnant since mid-October. And I think, to my mind, that remains the global risk. If the labor market continues to be hot, as the FOMC minutes indicated, the market may be mispricing what the Fed and what its resolve is to keep hiking rates to bring inflation lower. So just a few points. Nimesh, on a dealing room side, what are you picking up?
So, Prashant, as we all say, right, the big boys are back and they're back on the sell side. So the FIs have started the year on a selling mode. For the last few days, they've been aggressive sellers in the cash market. And the big fear is, whether the money will move from India to China, because that's been